What if the biggest reason you're not making consistent progress in trading has nothing to do with the market at all? What if the charts aren't confusing you? Your own mind is. Every single day, millions of traders stare at the same price movements, yet only a small number consistently make disciplined decisions. The difference isn't hidden inside a secret indicator, a magical strategy, or perfect timing. It's hidden inside the way they think when uncertainty appears. This video isn't about predicting the market. It's about transforming the person making the decisions. Because the moment your thinking changes, every chart begins to look different. Every loss becomes a lesson instead of a disaster. Every winning streak becomes something you can repeat instead of something you hope for. Throughout this journey, you'll uncover why fear quietly steals opportunities before you even notice it, how confidence is built through disciplined choices instead of lucky outcomes, why uncertainty can become your greatest advantage instead of your biggest enemy, and how consistently successful traders develop a calm mindset that stays steady whether the market is rising or falling. Each chapter builds on the last, slowly replacing emotional reactions with clear thinking, until everything comes together in one final breakthrough that changes the way you approach every single trade. By the end of this video, you won't just see the market differently, you'll see yourself differently. If you're ready to build a stronger trading mindset through psychology, discipline, and better decision-making, take a second to like this video and subscribe to the channel, because many more deep psychology-based trading lessons are on the way. And whatever you do, stay with me until the final chapter, because the last lesson is the one that separates traders who chase the market from those who approach it with patience, consistency, and control. And once you truly understand it, you may never look at another trade the same way again. Chapter 1. The Invisible Enemy. Why most traders lose before they enter the market. Imagine two traders opening the exact same chart at the exact same moment. They see the same candles, the same price levels, and the same market conditions. Yet one trader walks away calm and focused, while the other ends the day frustrated, emotional, and full of regret. What created such different results? It wasn't the market, it was the mind. Most people believe trading is a battle against price movements. They spend months searching for the perfect strategy, the perfect indicator, or the perfect entry. They believe that once they discover the missing technique, consistent results will finally appear. But the truth is much deeper than that. The market does not know who you are. It has no emotions, no opinions, and no desire to reward or punish anyone. It simply moves. The real challenge begins when your mind starts giving meaning to every movement. A small loss suddenly feels like failure. A winning trade creates overconfidence. A missed opportunity turns into regret. Before long, decisions are no longer guided by logic. They're driven by emotion. Think about the last time you hesitated before taking a trade. Was it because the setup wasn't clear, or because you were still thinking about your previous loss? Maybe you entered too early because you were afraid of missing out. Or maybe you exited too quickly because you feared giving back a small profit. In each situation, the market wasn't controlling your actions. Your thoughts were. This is the invisible enemy that most traders never recognize. It doesn't appear on a chart. It cannot be measured with an indicator. Yet it quietly influences every decision you make. Successful traders understand something that beginners often overlook. They know they cannot control the market, but they can learn to control their response to it. That single realization changes everything. When you stop trying to force the market to behave the way you want, you begin to see opportunities more clearly. You stop treating every trade like a personal test of your intelligence or your worth. Instead, each trade becomes just one decision among many, and that shift removes an enormous amount of emotional pressure. Discipline isn't about becoming emotionless. It's about refusing to let emotions make your decisions for you. Every professional understands that losses are a natural part of trading. One losing trade does not define your ability, just as one winning trade does not prove mastery. Long-term consistency comes from following a well-tested process, managing risk carefully, and making thoughtful decisions over and over again. As this journey continues, you'll discover that changing your mindset doesn't happen in one dramatic moment. It happens through small shifts in the way you think, respond, and learn from every experience. And the first shift is the most important of all. Stop seeing the market as your enemy. The real battle begins and can be won inside your own mind. Chapter 2. Mastering Uncertainty, the mental shift that changes every decision. Most people spend their entire trading journey trying to eliminate uncertainty. They wait for the perfect setup, the perfect confirmation, or the perfect moment to enter. They believe confidence comes from certainty. But the market has never promised certainty, and it never will. Every trade is a decision made with incomplete information. No chart, indicator, or strategy can reveal the future with absolute accuracy. The sooner you accept this reality, the sooner you stop fighting the market and start working with it. Think about a professional pilot flying through clouds. The pilot cannot see every mile ahead, yet the flight continues safely because every decision follows a proven process. Trading works in much the same way. Success doesn't come from knowing exactly what will happen next. It comes from consistently following a disciplined plan, even when the outcome of a single trade is unknown. This is where many traders struggle. After a loss, doubt begins to grow. They start questioning every setup. After a win, they may become overconfident and abandon the very rules that helped them succeed. In both cases, emotions replace discipline, and consistency begins to disappear. The strongest traders understand that uncertainty is not a threat. It is simply part of the environment they have chosen to operate in. Instead of demanding guarantees, they prepare themselves to respond intelligently to whatever the market does next. Imagine planting a tree. You cannot force it to grow overnight by watering it every hour. In fact, doing too much can harm it. Growth requires patience, consistency, and trust in the process. Trading is no different. Every well-planned trade is like planting a seed. Some will grow, some will not, but following the same disciplined process over time is what creates meaningful results. This mental shift changes everything. Instead of asking, "Will this trade definitely work?" successful traders ask, "Does this trade match my plan?" That simple change removes unnecessary pressure and replaces hope with preparation. Confidence also begins to look different. It is no longer built on winning every trade. Real confidence comes from knowing that you can follow your rules, manage risk responsibly, and remain composed regardless of the outcome. When your confidence depends only on profits, every loss feels personal. But when it depends on your discipline, no single trade has the power to shake your mindset. The market will always surprise you. Prices will move faster than expected. News will change sentiment, and outcomes will never be completely predictable. Yet none of these things have to control your emotions. By accepting uncertainty instead of resisting it, you gain something far more valuable than certainty. You gain emotional stability. And once your mind becomes stable in an uncertain environment, you'll be ready for the next breakthrough. Learning to think in probabilities, the perspective that separates emotional reactions from consistently smart decisions. Chapter 3. Thinking in Probabilities. How consistent winners really see the market. One of the biggest mistakes a trader can make is believing that every trade must be a winner. The moment you expect certainty from a single trade, you give that trade too much power over your emotions. Suddenly, every small price movement feels personal. Every loss feels like failure. Every win feels like proof that you were right. This emotional cycle is exhausting, and it often leads to poor decisions. Successful traders learn to see the market through a completely different lens. They stop asking, "Will this trade win?" Instead, they ask, "Over many trades, does my process give me a positive edge?" That single shift changes everything. Think about flipping a weighted coin. If the coin lands on heads more often than tails, you still won't get heads every single time. There will be losing streaks, there will be surprising outcomes, but after hundreds of flips, the advantage begins to show. Trading works in a similar way. A well-tested strategy may produce both wins and losses, but what matters is how it performs consistently over time, not the result of one trade. This way of thinking removes unnecessary emotional pressure. A losing trade is no longer seen as proof that your system is broken. It becomes one expected outcome within a much larger series of decisions. Likewise, a winning trade doesn't automatically mean every future trade will succeed. Each trade stands on its own. When traders ignore this idea, they often fall into emotional traps. After several wins, they may take larger risks because they feel unstoppable. After a few losses, they may abandon their plan completely because they believe it no longer works. In both situations, emotions, not logic, are making the decisions. Thinking in probabilities creates patience. It reminds you that consistency is built through repetition, not prediction. Your responsibility is not to control the market. Your responsibility is to recognize quality opportunities, manage risk wisely, and execute your plan with discipline. Over time, something remarkable begins to happen. You stop celebrating only profitable trades and start appreciating well-executed trades, even if they end in a loss. Why? Because you understand that following your process is something you can control, while the outcome of any single trade is not. This mindset also protects you from chasing the market. You no longer feel the need to recover every loss immediately or jump into random trades out of frustration. You become more selective, more patient, and far more consistent in your decision-making. The market will always contain uncertainty, but probabilities give you a framework for navigating it with confidence instead of fear. They teach you to focus on the long game, where disciplined actions matter more than temporary outcomes. And once you truly begin thinking this way, the next challenge becomes clear: mastering your emotions. Because even the best strategy and the strongest probabilities can fall apart if fear, greed, or impatience are allowed to take control. Chapter 4: Emotional Discipline. The secret behind calm, profitable trading. Every trader enters the market with a plan. But when the price starts moving, something else often takes over. Fear whispers that you should exit too early. Greed insists that you should hold just a little longer. Impatience pushes you into trades that never matched your plan. In a matter of minutes, a carefully prepared strategy can disappear, replaced by emotional decisions. This is why emotional discipline is one of the most valuable skills a trader can develop. It is not about ignoring emotions or pretending they do not exist. Fear, excitement, frustration, and hope are natural human reactions. The difference is that disciplined traders notice these emotions without allowing them to control their actions. Imagine standing at the edge of a fast-moving river. If you jump into the current without thinking, the water decides where you go. But if you remain on solid ground, you can observe the flow, choose the safest path, and move with purpose. The market is like that river. Emotions pull with incredible force, but discipline keeps you grounded. Many traders believe confidence comes from making money. In reality, lasting confidence comes from keeping promises to yourself. Every time you follow your trading plan, respect your risk limits, and avoid impulsive decisions, you strengthen trust in your own judgment. That trust becomes far more valuable than any single profitable trade. There will be days when nothing seems to go right. A setup fails. A stop loss is hit. The market behaves differently than expected. These moments test your character more than your strategy. They ask one important question: will you remain disciplined, or will you let one difficult moment influence every decision that follows? Professional traders understand that protecting their mindset is just as important as protecting their capital. They know that revenge trading, overtrading, and emotional decision-making can create far more damage than a single losing position. Because of this, they treat patience as a strength rather than a weakness. Emotional discipline also means accepting that not every opportunity belongs to you. Sometimes the smartest decision is to wait. Watching the market without taking unnecessary action requires more self-control than constantly chasing movement. Patience allows quality opportunities to stand out while emotional impulses slowly fade away. As this habit becomes stronger, your relationship with the market begins to change. You stop reacting to every price movement and start responding with intention. Instead of feeling controlled by uncertainty, you become steady within it. Instead of searching for excitement, you value consistency. This is where real progress begins. Not because the market has become easier, but because your mind has become stronger. And when disciplined thinking becomes part of your identity, one final breakthrough remains: the shift from simply following good habits to becoming the kind of trader who naturally makes calm, consistent, and intelligent decisions in every market condition. Chapter 5: The Profitable Trader Identity. Becoming the person who wins consistently. Every skill you've explored so far leads to one final realization. Consistent trading is not built by chasing perfect trades. It is built by becoming the kind of person who can make disciplined decisions over and over again. This is where many traders make a critical mistake. They focus on changing their results before they change themselves. The market responds to your decisions, and your decisions are shaped by your habits. If your habits are driven by fear, impatience, or the need to prove yourself right, those patterns will eventually appear in your results. But if your habits are built on preparation, patience, and discipline, your decisions become more consistent, regardless of what the market does on any given day. Think about an experienced athlete preparing for an important competition. Long before the event begins, the hard work has already been done. Daily practice, discipline, and repetition have created habits that can be trusted under pressure. Trading is no different. The calm decisions you admire are not created in the middle of a fast-moving market. They are the result of countless disciplined choices made long before the opportunity appeared. This is why identity matters more than temporary motivation. Motivation comes and goes. Some days you feel confident, and other days you don't. But when discipline becomes part of who you are, your actions no longer depend on your mood. You follow your process because it has become your standard, not because you feel inspired. A consistently successful trader doesn't wake up asking, "How much money can I make today?" Instead, the better question is, can I execute my plan with patience, manage risk responsibly, and make thoughtful decisions? Ironically, focusing on the quality of your decisions often leads to stronger long-term results than focusing only on profits. There will still be winning days and losing days. There will still be unexpected market movements and moments of uncertainty. But those moments no longer define your confidence. Your confidence comes from knowing that you can stay disciplined, adapt when necessary, and continue following a structured approach. This mindset transforms the entire trading experience. Losses become feedback instead of personal failures. Wins become opportunities to reinforce good habits instead of reasons to become careless. Progress is measured by the consistency of your decisions, not by the outcome of a single trade. The greatest traders are not those who never make mistakes. They are the ones who learn, adjust, and continue improving without allowing emotions to take control. They understand that long-term success is a journey of continuous growth rather than a destination reached overnight. As you leave this video, remember one simple truth. The market will always test your patience, your discipline, and your mindset. You cannot control every price movement, but you can control how you prepare, how you respond, and how you continue learning. And in the end, that is the difference between chasing success and building it, one thoughtful decision at a time.